Jeff Pierce looking at Supermicro for us. Hero of the morning, Jeff. Semiconductors down 2%, Supermicron's up 3%. Is that because JPMorgan's on board?
Yeah, I do think it is piling on to the acknowledgement that maybe some of the issues, especially around the SEC filings, are now behind us. And we're very far away from those 100 plus per share prices we saw this time last year, but they are inching up this year to date. We got JPMorgan, as you pointed out, upgraded them to neutral from underweight. Price target of 45, up from 35. They said the company has cycled past that uncertainty around those SEC filings. They're on the cusp of benefiting from the ramp in Blackwell-based server shipments, which they already see materially higher demand than prior generations. However, the firm did say that they're raising their forecast for revenues for the next 12 months, given the positive data points in recent weeks relative to the better supply ramp from Nvidia. That balances the upcoming strong revenue progression with potential concerns around some of their margin trajectory, especially in this kind of competitive landscape that's really been, getting tighter and tighter in this space. It's similar to what we've seen out of some other analysts. Rosenblatt last week, it reinstated their coverage of Supermicro, buy rating, $60 price target. They seem to feel pretty positive about the AI systems, the gross margin upside. Certainly, they said that there's still room for the company's price to earnings multiple to move higher if they start to hit those revenue targets and gross margin targets. So positivity after what's been a really, really big downturn over the last 12 months for the stock.
Okay. Interesting that it's firming up alongside some of the other underperforming semis, like we've had outperformance from Intel again today.
Yeah, absolutely. I think what we're seeing here, and keep in mind, Supermicro has this very unique story because of those issues that they've had, but we're seeing business that was thriving a lot with this AI demand, specifically because of Nvidia and their demand for those GPUs. We saw revenue doubling in 2024, gross margin sitting at $2.1 billion. But like all these AI exposed stocks, Supermicro has dropped because of some of the tariff risks. They've dropped because there's a lot of concern around pace of investment in terms of that computing infrastructure. And this has been a particularly wild ride for SMCI. Investors are still very cautious about the AI trade, but we are seeing them kind of go in and out of it. I think there's been some kind of back and forth as they're watching the market. DeepSeek is, of course, still a big concern. Is our company is going to spend less on hardware, and investors are really concerned about some of the competition in the space. I think that we're going to see continued up and down moves from this company. If we start to see some better numbers come on revenue, because we've seen some slowdown, that's when investors are really going to buy in, because we've seen them cut down their annual forecast on revenue in the past, and I think that's also keeping these numbers lower.
Okay, so all right, so then maybe maybe there's kind of a bar there that maybe is too low, perhaps. The endorsement from a firm like JPMorgan, I think, is a big deal at this point, because I think there still is an air of rightful skepticism. The fact that they held all the way until like the hour of their deadline to get their paperwork together and stuff to stay listed was insane to me. So I think the more you see some of these big, more recognizable Wall Street shops say to buy it, but they're also not sticking their neck out too far, because it's at $40 already.
Yeah, I mean, listen, they have to balance what SMCI has been doing. I mean, you think about that AI server lineup they just announced with Nvidia. You think about some of the moves we've seen in terms of their new products, the petascale storage, all of that. All of that mixed with the fact that we have a lot of uncertainty in this trade right now, right? You look at Broadcom giving pretty reassuring signals in their last report. You look at Foxconn reporting revenue for the first 2 months up about 25% from 2024. Then you look at HPE, given their weak forecast, citing inventory issues, and all of this kind of around what is a tariff issue, economic concerns. And, this sector, while it's done extremely well, is one of the riskier sides of things when we've got all of this going on. I think investors are very concerned about getting too deep into that. And I think analysts are concerned about projecting too high of numbers.
Okay. All right. I think that the expectations start to shift a little bit. That's going to be a good thing as those bars start to rise a little bit. They're talking a lot about Blackwell, though, which interesting. You could definitely have a handoff of timing where some of the second order beneficiaries of the Blackwell ramp are gonna. I guess they're pretty first order, I guess, to be honest. So you buy a chip, you're gonna get a bunch of stuff to put it in a rack, set it up, and all the connections. So with Nvidia though, listless, that's kind of my only catch is the market's not super bullish on Nvidia right now. I mean, we got a rejection from 120 again. So Supermicro kind of tying their horse to them at this juncture. I hope it's not too late.
Yeah, I mean, I don't think it is.
I don't think it is either.
Sales are up 55% year over year in the last report.
Wow.
That's a great number, but it's a slowdown from these, doubling of these huge sales growth we've seen over the last few years, and it didn't quite meet expectations. Margins are falling a little bit, operating margins coming down a little bit. All of that stuff is putting pressure on this
Some
company.
of that's also, though, from all the expenses tied to the accounting stuff as well. So if it weren't for that, the market would probably love this stock. I mean, it did, right? It did for a long time.
It will love the stock. And if you feel that strongly about the AI trade, I don't think that love for the stock should be gone. Now, should you be concerned about everything else that's going on? Absolutely. And I think that's what we're seeing from investors. I don't think it's too late for them to be this tied up to Nvidia. And I don't think it's too late for investors to be excited about Nvidia. It's just a very tough game to do it.
No, for sure. I was just kind of offering if there's like a lack of appetite for flows in general, but to the point we were talking, Intel's been strong, and up until today, Micron was actually strong too. So there's appetite for non-Nvidia chips right now. And I guess it's just kind of a binary bet on whether or not you trust the team and that all the stuff with the accounting is behind it. If so, then I think it's probably a stock a lot of people love. Thanks, Jeff. Appreciate that very much. You've convinced me. Dan Deming, managing partner at KKM Financial. Sorry to keep you waiting, Dan. It's an interesting situation with Supermicro because it's like all the numbers seem good, but then a lot of the tone is really, still corrupted kind of.
Oh, for sure. I mean, yeah, it's still in that repair mode. Is from a standpoint of the fact that they did just barely make the cutoff, and there was so much uncertainty surrounding the operation of the company. So, yeah, I mean, as we get further away from that disruption, and valuations have certainly come down dramatically, and as you guys pointed out, just that rotation that's unfolding in the market, it's kept a lid on it to some degree. We did see that big pop, and when was it? I think it was, I'm looking at it, middle of February, where we got up to, 65 briefly, and then fell back down to the mid-30s. But I think as it continues to work through those issues and puts them in the distance, and just the general trends in the space, that I think SMCI is going to be a contributor and pretty active in the AI conversion, and continue to realize some higher price action as we work through some of the selling pressure the market's contending with, as far as just the mean reversion and the rotation in the markets.
Okay. All right. So with the volatility, I'm sure there's still a lot of fun ways to trade this stock. So take me through the strategy.
There's a lot of different ways to look at this. It's to some degree risk reward, and also just again, what is the outcome that one is looking for, as far as do you want to sell puts and then collect a nice premium and then have the opportunity to get put in below. I think in this case, though, Oliver, I'm still, because of the volatility in this stock, the defined risk is the first and foremost in my thought process when I look for ways to, trade this name. And so in this case, I think that one way to capture farther upside, if we do realize it, if we hold this 40 level and make a run at 65 over the next couple of months, just buying a call spread, honestly. You can do a pretty wide call spread here, capture a pretty solid range, and it really doesn't cost all that much relative to how volatile the stock is. And so the trade example today is just looking 1 month out from expiration today into April expiration, and buying the 39.49 call spread. I mean, you can do that for right around $3, just maybe $3.10 at these levels. So you are buying the stock a little higher than intrinsic right now, but you have that defined risk to the downside. At $3 is the max loss, but you get to capture $7 to the upside. And, so if we do see a nice run back up towards that 50 level of the next month, you capture a big chunk of that move and still have some defined risk to the downside.
Okay. I like that. So you can handle a little chop, you can handle a little pushback as long as it stays firm.
Yeah, I mean, and it's a straightforward type of exposure to the stock, but again, you're paying a premium for the call spread. But the idea is that it defines the risk to the downside. The max drawdown on this is $3.10 in this instance, where the stock could move more than that in one day. We've seen it multiple times over the last several months. And but you still have a nice capture range to the upside, between let's call it 42 up to 49. So and if we do see some stability here and another move back towards those recent highs, which it wouldn't take much, honestly, you are capped on the upside. But again, that's just if you capture that range over a month, I think that's a pretty solid return profile for exposure to the name. And, again, there's other ways to kind of initiate the exposure. If you want to reduce the cost of that call spread, you could always sell a put underneath the market with the understanding that it opens up the downside, but you're okay getting long the stock at some lower level.
Mm-hmm. Yeah, collect some more income. All right. I like those ideas. I like the approach. I think to Jeff's point, Supermicro has a pretty interesting sales pitch right now, which is like, oh, you're looking for a good AI trade with bananas growth right now that was held down by some managerial problems last year.
Exactly.
If you sweep those under the rug, suddenly this looks pretty nice. Appreciate it. Thanks, Dan.
All right, Oliver.